They say the stock market rewards the bold. But what if I told you those who move slow, steady, and deliberately often win the long game? This is the philosophy behind turtle investing. A strategy inspired by one of nature's slowest creatures, but also one of its most successful survivors. In this video, we'll explore how investing like a turtle consistent, and patient can outperform the fast-paced, higher-risk tactics that dominate headlines. The myth of speed in investing. Everywhere you look, you're told to act fast. Buy the dip. Time the market. Get in early. But research from Vanguard and Morningstar shows that timing the market is nearly impossible to do consistently. Even professionals struggle to beat the index long-term. Short-term trading often feels exciting, but that excitement comes at a cost. Higher fees, greater stress, and often lower returns. Turtle investors don't try to outrun the market, they outlast it. The turtle's advantage? Compound interest. The most powerful force in investing is compound interest. Albert Einstein reportedly called it the eighth wonder of the world. Here's the secret. You don't need high returns, you need time. Turtle investor starts early, stays consistent, and lets time do the heavy lifting. For example, invest $300 a month in a simple index fund starting at age 25. Assume an average return of 7% annually by age 65. You'll have over $700,000, and that's without ever increasing your contributions. Slow steps, repeated over time, beat sudden sprints that burn out. Risk control. The turtle's shell. Turtles survive not by speed, but by protection. Their shell is their shield. For investors, that shell is diversification and risk management. Turtle investing avoids risky bets, emotional decisions, and market hype. Instead, it prioritizes broad diversification. Low-cost index funds, consistent contributions, emergency fund before investing. It's not sexy, but it's strong. As Warren Buffett said, the first rule of investing is don't lose money. Second rule is don't forget the first. Automate like a turtle. Turtles don't chase. They follow a path. Set up automatic investments every month. Don't wait for the perfect time. Just invest in time every time. Studies show people who automate their savings and investments are far more likely to reach their financial goals. Automating removes the temptation to time the market. It turns investing into a habit, not a hope. Ignore the noise, focus on the goal. Turtle investors don't check their portfolio every day, and they're not watching CNBC 24/7 or panicking over every market dip. Instead, they focus on their long-term goal: financial freedom, retirement, peace of mind. The market will rise and fall. Headlines will scream, social media will hype, but the turtle stays the course. History tells us the S&P 500 has returned around 10% annually over the past 90 years, even through wars, recessions, crashes, and crises. Those who stayed invested came out ahead. Case study: the tortoise versus the hare investor. Let's imagine two investors. Hare tries to time the market, jumps from crypto to penny stocks, follows hype. After 10 years, earns 4% on average due to higher risk losses. Turtle invests monthly into low-cost index funds, never stops. After 10 years, earns a solid 7% annually with peace of mind. The result: the turtle ends up with more money and less stress. Turtle investing checklist. Want to invest like a turtle? Here's your action plan. Start now, even small amounts. Automate your investments. Choose diversified low-fee funds. Reinvest your dividends. Ignore short-term noise. Stay the course, especially during downturns. In a world obsessed with speed, slow is a superpower. The turtle didn't win the race by sprinting, it won by never stopping. So if you feel behind or overwhelmed by the noise of investing, remember this: you don't need to be fast. You need to be consistent. Invest like a turtle. Protect your shell. Stick to your path. And one day you'll look back and realize you won the race. If you found this philosophy helpful, don't forget to like, comment, and subscribe for more animal-inspired financial wisdom.